Some weak data on the housing market, mortgage demand dropping over the holidays. This is according to the latest data out from Mortgage Bankers Association. Now, that's even as mortgage rates continuing to fall through the month of December. We did see, though, rates level off just a bit because just last week, rates ticking just a bit higher. Now, our next guest being a bit more optimistic about the real estate market this year, but encouraged about some of the buying activity that we could see. For more on that, we want to bring in Daryl Fairweather, chief economist with Redfin. Daryl, it's great to have you here. So let's talk about what we're expecting from the Fed, potential rate cuts this year, what exactly that then means for potential home buyers out there. How big of a driver do you see that being for the housing market in 2024?
The recent data from the economy shows that the economy is starting to normalize, which is why the Fed can pull back a bit. And this is great news for the housing market. The recent decline in rates has already encouraged more buyers to come back, and sellers are coming back too. So with more supply and more demand, it just looks like it's going to be a healthier year for the housing market.
So talk to us a little bit more about a healthier year. Than what more specifically should we be expecting?
There will be more buyers and more new listings. It's a little bit too early to say exactly how strong demand or supply will be, but I think we're going to see more sales this year than last year. And it's a bit uncertain if prices are going to go up or down. We're forecasting that they go down just a little bit, but that could change if demand comes back stronger than supply does.
So when we talk about affordability, obviously a massive issue here. We are seeing maybe some improvement when you take into account that mortgage rates, the 30-year mortgage rate off the highs that we saw not too long ago. How do you see that story playing out, given the fact that we would likely see a supply shortage if we do see any improvement on pricing?
The recent decline in rates is improving affordability already, but I think the window for which affordability is going to improve is going to be a short window, potentially only this year, because once buyers come back to the market, they're going to start competing, and that's going to drive up prices unless we see a substantial increase in supply to match that demand. And there's really no place for that increase in supply to come from because we're not seeing as much new construction as we did these past couple of years.
When it comes to that new construction, clearly a lot of potential home buyers, especially new home buyers, really not given another option, given the fact that existing homes simply are not on the market. How big of a player do you see that being in the housing market this year and the ability maybe to alleviate some of the pain that we're seeing for inventory levels?
I think new construction is going to play as big of a role this year as it did last year. We're going to see more existing homeowners decide that now is a good time to move. People who had been previously putting it off because they didn't want to trade their 3% interest rate for a 7% one, some of those people just can't wait any longer. And also the decline in rates is making that decision not so difficult. And new construction has already slowed down. So I think it's going to be more driven by existing stock of housing than new construction this year.
All right, Daryl Fairweather, great to have you here, Redfin's chief economist. Thanks.